Hello guys, welcome back to another video. Today is going to be a bit of a different video. Today we're going to be looking at the El Salvador Bitcoin miner volcano energy launch with 250 million investment. And we're going to have a little look at the numbers and potentially do some calculations which we could figure out kind of how much hash rate this company could take or how much centralization this company could actually bring upon the Bitcoin network. So it says there obviously 250 million as a private partner with El Salvador pledging to pump 1 billion into creating Bitcoin mining farms and has received its first 250 million. So they already have 250 million. The first release of funds kickstarts a 241 megawatt power generation park in the country's Metapan region. Volcano energy. So people were saying that it's actually going to be powered by volcanoes, and that's a bit wrong. Volcano Energy is actually the company. This is like a registered company called Volcano Energy. So they're not actually using Volcano Energy, that's just the name of the company. It said the funds will go towards developing the power generation park using solar and wind energy, which will eventually power the Bitcoin mining operation. As it says there, solar and wind, not actual volcano energy. And then it just says about the CEO went to Twitter. Bitcoin mining uses high power computers, so we know about how Bitcoin mining works. And then stablecoin user Tether is among the investors in the first funding round to develop Volcano Energy. Although its investment figure is undisclosed, Tether Chief Technology Officer Pablo Adinio said that the investment marks the stablecoin user's intent to drive investment in renewable energy production and mining infrastructure. So Tether is obviously getting in on this action. According to Volcano Energy, the 241 megawatt power generation capacity will be divided between 169 megawatts of photovoltaic solar energy and 72 megawatts of wind energy. According to Tether, the computing power in the park is in excess of 1.3 equihashes per second. If achieved, this would position Volcano's energy cumulatively Bitcoin mining hash rate among the top 20 pools worldwide. According to Volcano Energy, the park is pioneering examples of Bitcoin mining driven by renewable energy, reflecting the industry's constant innovation and growth in a competitive landscape. The Salvadorian government will play a crucial role in planning and execution of the initiative, securing preferred participation equivalent to 23% of revenues. The investors will own 27%, with the remaining 50% reinvested in expanded energy production capacity and advanced Bitcoin mining. And on mining pool stats here, we have the top pools for Bitcoin. Obviously, Foundry Digital is the biggest one, however, that's only accessible in the US. And then Antpool, Binance.com. I didn't actually know that Binance had pools. I didn't realize that until, a couple of months ago, actually. But they do have pools. And then F2 pool via BTC.com. So what does this look like? So 1.3 equihashes per second. The highest pool right now is at 109 equihash per second. So this is only a pool, which means that it is not as centralized as just having all the Bitcoin miners in one place, which I think that this Volcano Energy will have all of these miners in the same place. So 1.3 equihashes looks like around, if we do the calculations, let's go to basic miner value and let's just get an S19 and see what those look like. So let's go for an S19 XP. So right now they're doing 140 terahash on the network. When we're on this mega hash calculator, we can see we can input 140 terahash. So this equals 0.00014 equihash. So what we need to do for the calculations is do 1.3 here, and then we need to divide this number by 140, basically. So we're just going to take this number, divide it by 140. If we see here, that gives us around 9,200 units of the S19 XP. So I don't know how many units of the S19 were actually sold, but that's a large majority of the S19s on the market, I believe. However, I believe that this company is probably going to be buying old hardware as well, because of the fact that this company is set up as solar and wind, so it's basically renewable energy, which means the main cost for obviously ASICs and mining is the power consumption. That's where you make or break your profit. So in theory, they can mine on any machine, even if the profits are very low. They would want high megahash and terahash machines. However, they could also go for machines. If we look here, let's find, okay, so right here, you have Antminers S3, S5, S7. These are all unprofitable, but I think the main ones that we're seeing normally on the network when profitability kind of goes up a little bit is the S9s jumping back on the network. The S19 is obviously still profitable, but you have all of these other miners which are unprofitable, which were released, 2, 3, 4 years ago, which could potentially actually bring in profits if you have them on solar power. Now, there was a lot of conversation about how Bitcoin's energy is, something like 40% renewable energy right now. So a lot of these people who are using renewable energy are mining on these machines because they don't have the cost of energy that they have to pay for. So they're basically mining Bitcoin for free. I know they had to set up the infrastructure, and that's what El Salvador's Volcano Energy Company is doing. We might see a little uptick if this goes through. Obviously, they still have a long way to go before this is actually put through. However, we're probably going to see an uptick in purchasing of these ASIC miners. And one of the main things that we're probably going to see from a subsequent uptick of ASIC miners being bought is the fact that ASIC miner values will actually go up. As you can see, there's loads of ASICs you can buy, but they're probably going to be going for Bitmain Ant miners just because they're so profitable, which would mean that they'd make more profits for their investors and to reinvest into the company. Now, I did want to talk about centralization. They will have a lot of these machines in the same place. I know it's not as big as Foundry Digital or Antpool, but those are obviously pools, and people were actually joining up to that. So when we scroll down, we want to look for one that has Equihash if we're looking here. So ultimuspool.com, they're probably going to be taken over, and I don't think they will have any PPLNS or percentage taken from the miners, just because I think that it's going to be its own thing where they run their own nodes, so you can just mine off that node. I don't know if they're going to open a pool. Probably not. They're probably just going to buy a bunch of miners and run off their own node. And they do have potential, as you can see. The last block on this pool was 2 days ago. So you will be mining Bitcoin with that amount of hash rate. You just won't be getting as much blocks as the top pools like Foundry Digital. The second option obviously is to join a pool, which if you were looking for one, they obviously couldn't do Foundry Digital or a lot of these like Binance or Luxor Tech because they're all in America. You wouldn't want to connect to those nodes because you'd get stale shares and stuff like that. So the highest one would probably be Antpool if they wanted to mine in South America, but I don't know what the connection would be like. I think it would be easier for them to set up their own node and just mine to that instead of joining a pool, because they'd probably be given a large amount of profits over to pools when there's actually no need to. Now, a little bit more about ASIC miners. So one of the main things that I want to get over and across a point to you guys is that even if you're investing in coins, you should probably invest in hardware as well. I would probably start out with GPUs because they're easy to set up and you can mine on a bunch of different coins. Obviously, ASICs, you have to stick to one algorithm. Like the L7 is still profitable and a bunch of these are still profitable. The Jazz Miner, the Ant miners. However, investing in the actual miners for cryptocurrency is one of the biggest things that you can do to either make profits or not passive income, because you still have to set up the miner and look at it and monitor it, but slightly passive income. Mainly in the fact that these miners right now are super cheap. So not the L7s, but probably the S19s. If we go down to, let's just find one that's very unprofitable. So the S19J Pro Plus, 122 terahash. It's making a minus profitability of $1 per day. Now, they go for $1,500. However, in the bull run, if we see Bitcoin hit, 100K, maybe 200K, between that, these miners will go up in price. Probably, I want to say that these will probably be going for like $10,000. I know if you buy one and start mining on it, you're obviously going to have to sell it secondhand. So there's a bit of a hit that you take on price by buying one of these if you start mining on it. However, if you just buy a bunch of them in stock, and if you have $1,500 and you don't think that you're going to stick it into Bitcoin right now, then I'd probably invest in the hardware to actually mine these coins. And then when it comes to the bull run, you can firstly sell the coins off which you mined right now, which will go up. We're at 21,000. I don't know what that is, 25,000 in America. Let me just check here. United States dollars. So $26,000 per Bitcoin. Obviously, we had a drop off because of the Binance stuff and the Coinbase stuff. If this goes up to 100K, you're looking at around 4x your money. However, the ant miners will be 10x your money. And in the last bull run, we saw that ASICs were selling off the shelf. All these GPU prices were super high, and same with the ASIC miners. You know, the S19J Pro, I believe, was going for like $40,000, something like that. The Cadena miners were going for super high. So maybe you guys should look into buying hardware, mining on it, for the possibility of also selling on the hardware in the future. I know that they're going to be coming out with certain more efficient ASIC miners, but that doesn't mean that these like 1 to 2 year old miners can't still make profits in a bull run. And as I said here, look, the price of them is just extremely low right now. And then if we scroll down to one that's actually profitable right here, we have the S19 XP. This is, and they're only going for $5,000 and they're profitable. So you can imagine what these are going to be priced at maybe in the future when Bitcoin is profitable to mine, and you can mine a lot on them because they've got high terahash hash rate. And the same goes for GPUs, just not at such scale. I think the 30 series will probably be in demand if we see a nice bull run of coins like Flux, Ravencoin, you know, even these ones that are allowing GPUs on the network. We saw it with Kaspa, we saw it with Nexa, Radiant. However, those probably are going to be getting FPGAs, so you might want to invest in that type of hardware instead of investing in GPU hardware right now for those coins. Probably the best bet is to invest in hardware, mine on that hardware, because then in the future you get the plus of selling the coins, which will obviously go up in price in a bull run, plus you can sell off the hardware in a bull run. Now, if you guys have any opinions on what I've said in this video, please leave them in the comments below if you think I'm wrong about any of these ideas of buying hardware instead of buying coins right now, because you can buy the hardware, mine on coins, sell both. That is the main point I'm trying to get across in this video. So hopefully you guys enjoyed. If you did, leave a like and subscribe to the channel. We're going to be hitting 2,000 subscribers soon, and thanks for all the support on the channel over the past couple of months. We've been going crazy on subscribers, views, and interactions on the channel.